Joining me now from Sydney is Tom Kenny, Senior International Economist at ANZ. Tom, many thanks indeed for joining us this Friday. Let's go first of all, US jobs, the biggest figure of the month. We know that, again, forecast for 101,000 to be added for the month of June. And of course, 9.1% unemployment rate. Yesterday's ADP figure was very encouraging indeed. But, I mean, how big is this figure, particularly with the cycle that's happening in the US, with the debt concern, the default word hanging around?
Yes, I mean, the ADP report was very encouraging, coming in at double expectations. And I think what we saw last month, it's a pretty good lead indicator for overall US non-farm payrolls. That in the previous month, that sort of gave a good indication that the payroll figure would be quite weak. So we'll probably see, even though you mentioned 100,000, I think the figure will be revised upwards for expectations. We're looking for around about 150,000 jobs for the month.
Tom, looking at your research here, you've got research soft patch or quagmire, referring to the US. Which one is it, do you think?
Central scenario at the moment is that it is a soft patch. That being said, I mean, the US has come out of a significant, asset price deflation and credit, deflation as well. So, I mean, any recovery from this kind of event is going to take some time. But that being said, there's quite a number of favourable developments, we think, in terms of, if you look at the household sector, they've done a lot to restore their balance sheets. They've been paying back debt. Their saving levels look good. If you look at the corporate sector, their gearing levels are very healthy. They're sitting up with lots of cash. I think in the US, we're just looking for a bit of confidence, and we think that should sort of, once the US generates some confidence, that should be good for the overall economy there.
Interesting in your research, Tom, you talk about the mood among small business has turned sour again and contrasts with the more upbeat mood of the larger companies.
Yes, that's right. I think what you find in the US, that a lot of the smaller businesses are kind of linked into the housing or construction sector, and there the outlook has been pretty, well, we've had a very bleak picture for the housing sector there for some time, and even in going forward, the outlook for the housing sector is still quite soft. So we think that the expectations for the smaller business are tied more to the fortunes of the housing sector, whereas corporate America isn't so much tied to that particular sector.
If I can move on from the US, Tom, and go to Japan. Also part of your research is Japan. Indeed, you talk about signs of a recovery, clearly after what's happened back in March. That's good for the Japanese, but how sustainable is this recovery, and again, how strong are the signs?
I guess prior to the earthquake hitting, we were quite surprised at the strength in the Japanese economy. The investment intentions look quite positive there, and post the earthquake, what we saw was quite a sharp drop-off in production, so a real big supply shock to the overall economy. But looking forward, I guess the Tankan survey was very optimistic on the investment outlook. So we think the rebuild story for the Japanese economy should put it in good stead over the second half of this year.
Tom, a final question for you, if I can. As you cast your net across the world as an international economist, what alarms you right now about the global economy that really stands out?
Well, I mean, I guess for my... I guess there's two major issues. The policy imbalances that we see between developed economies and the emerging economies, where probably policy is too loose in some of the emerging economies. They really need to tighten their policy a lot more and probably be a bit more flexible with their exchange rates. And I guess the second issue is what's going on in Europe and the sovereign debt crisis there. I think that there has a potential. It could have the potential to be quite a destabilising event for overall credit markets.
Tom Kenny, many thanks for joining me this morning. Tom Kenny, the international economist at ANZ Bank.